Anyway, that's crazy stuff. Okay, so welcome to our meeting. Like I said, we may have limited connectivity to McGraw-Hill. So when we get through with my little presentation, we may or may not be able to go through and look at specific questions. We'll do our best. It worked, like I said, worked for me earlier today, but I know it's been in and out, and a lot of people have had trouble. I'll just reiterate this for the two of you who just got signed in. We will be extending the exam at least till tomorrow night, and maybe longer depending on this outage and if it continues. It's an outage that's actually, it's bigger than BYU. It's bigger even than McGraw-Hill. It's a large scale outage affecting multiple systems at multiple companies, and so this is what's interesting from our perspective. They're all different things, but like AWS and other global platforms are behind a lot of these things we're using, and so if one of them goes down, it can impact multiple systems. A little scary to think that the machines rule the world, but someday we'll have to. Well, it'll be like Terminator, right? We'll fight back against the machines or something. Then teachers will have to grade their own papers again. Maybe I don't want to fight the machines. Anyway, so other general announcements, none really. I'm going to try to get those rough drafts or first drafts on the ethics assignment done tonight. That's my goal. And I think that's it. For me, any questions regarding, again, not specific assignment questions, but other things?
The final exam is due Wednesday, but does it open on Monday morning next week?
That sounds about right to me. Let me look. I don't remember when it opens. Let's see.
I think it opens on the 11th. I remember I saw this morning.
On the 11th? Okay. So
I think it was on Saturday.
Okay, that would be better. That'd be nicer for some people, I think. Especially because, like, as people, like, I've had a few people going on vacations or whatever, and they're asking me, like, on the last exam, can you open it early? And when I did, it wasn't working. So for whatever reason, like, my permissions wouldn't work to open it early, which, you know, stinks. I've always appreciated students who are like, hey, I have something coming up. Can I do it early? So I'll confirm that, but I believe you if you say that it opens on the 11th. I don't have that right in front of me, but I can have it in front of me very quickly. Let's see. Also, I'm seeing the 13th, 12:13 to 12:15. Where did you see the 11th?
On the proctorio thing, but I will double check. That's what I remember, but I can check again.
Oh, and there's been some weird stuff like that, like where the McGraw-Hill dates don't line up perfectly with, and so let's see. So I'm looking in here in iLearn, and it says available from December 11th. So let me reach out to some people and see if we can figure out which it's supposed to be. I'm going to push them for 11th, because the way it's set up right now is you'd be able to open the little quiz in Canvas, but then the link through the exam would tell you that it's not available yet, right? And so that's not okay. So that's a good catch. I'm glad you asked, and that lets us see if we can get that fixed. So you were right. You were both right. 12:11 and 12:13. So, all right. So I will find out about that as soon as possible.
Hey, Brother Fox, have you
Yes.
had a chance to look at the final exam?
Like, look at the questions on it?
Yeah, like, have you looked it over?
No.
What?
Why would I? What? Tell me
Okay,
why you're
so-
so shocked, I guess.
Because I'm thinking you should be looking it over and like preparing us, like, this is the hardest one, you guys need to really, or this one is not the hardest one. You just, if you've learned everything, it'll be okay.
Isn't the outline go over everything we need to know from the one you've been posting?
It does, absolutely.
Well, really, but still. ugh.
I'm
Sometimes
sorry.
I look at the outlines and like when I read through them, I sometimes think, what is that? But then I look it up or whatever and I kind of study it, but I do
Right.
okay on the exams normally.
You know what? Have you checked out the cheat sheets at the back of the book? Each chapter has one. That
Yeah.
kind of gives you an overall and it really helps you break down how to do each problem. I've been using that the last 2 tests and it's really helped me out.
Yeah.
No, so I'll be honest, like I don't look at the exams ahead of time because I'm not allowed to share any information from them with anybody. And so I don't. I mean, I guess you've made me feel bad about it now. So I guess maybe I should. Um,
Okay,
like
so I read it-
somehow by having read all the questions, I could be more encouraging. Like this hey, I can just tell you without even looking at it, piece of cake. It's going to be the easiest thing you've ever done in your whole life. But I don't know that. so
I don't want to relax because the second exam, it was hard for me.
yeah, the second one was tough for a lot of people, which is interesting because in the old, the last version of this course, the second exam was the nasty one too. I think because it covers things like adjusting entries, and adjusting entries are just confusing unless you work with them in real life all the time, right? They're kind of abstract. So Jody, I will take a look at it and I'll give you my honest opinion and I'll tell you what I can tell you. I'll put that out there.
Okay, thank you.
But and anyway, so again, I can't tell much. I can't say like, hey, there are. I could probably get away with saying, hey, it's really heavy on this material. Probably no one would yell at me. Anyway, we don't yell in the church. We just look at people with stern disappointment, right? That's anyway. All right, I better stop before I say something that somebody thinks was across a line or something. Let's see. So let me pull up my Zoom controls here. And we'll talk a little bit about chapter 9. Screen 1. Okay, so chapter 9, as you're aware by this point, is all about current liabilities, so short-term liabilities, money you owe people in the near term. I think it's one of the more important things that we deal with in accounting, because if you can't meet your short-term obligations, then you can't stay in business very long. Businesses can get away with not having a profit if they can borrow, or if they can. You think of a company like Tesla that has operated for years without a profit. In fact, I think they turned their first profit last year. But by selling stock and other things, they've been able to operate. But if you can't pay your debts, like if you can't pay your employees, pretty soon they find new jobs. They don't want to stay there. Anyway, so here's just a couple of things. I'll go through fairly quickly because I think it's not real new. So here's an example of a short-term note. So on August 23rd, the Brady Company asks McGraw to accept $100 cash and a 60-day 12% $500 note to replace its existing $600 accounts payable. So this happens fairly often when, remember, accounts payable, this is where we owe somebody money, and it happens fairly often that businesses will kind of reach out to the person they owe and say, hey, remember how I said I promised to pay you in 30 days? I really can't afford to do it. So can we write a note? Can we make a more formal arrangement? I'll even pay you interest. And so when that happens, all you really do is you debit the account payable to get rid of that account payable, and you credit a note payable. In this case, they happen to pay some cash too. So they're gonna, debit the account payable, credit cash, the amount of cash, and then credit the note payable for any remaining amount. So that's pretty, again, I think this is pretty straightforward with stuff we've done in the past. So then let's see. Then on October 22nd, they pay off what they owe. So they're gonna debit the note payable. They'll debit the interest expense for that interest they incurred during the period, and then they'll credit cash for the amount they pay. Remember, interest expense is still the same formula: principal, the amount borrowed, times the rate, times the time, and that time is always in terms of a year, because our rate is expressed in an annual way. So 60 days was 60 out of 360. Same idea here. Company borrows $2,000 from a bank, so cash goes up, notes payable goes up, a debit to cash, credit to notes payable. And then November 29th, they repay the principal of the note plus interest. So again, you calculate the interest by saying there was 2 months at 12%, times the principal, 2,000 times 12% times 60 divided by 360. And then we debit the note payable, we debit the interest expense, and we credit cash for the whole amount. So again, I think those aren't super new to us, even though that, recognize that sometimes, in fact, often our notes will extend over 2 financial periods, right? I mean, it's nice when a note only extends through the current year or whatever, but often it will extend over 2 periods. So at the end of the current period, we have to do an adjusting entry to recognize any interest expense that we've accrued up to that point. And then at the maturity date, we'll do an entry to pay it off. So here's an example. On December 16th, we borrowed $2,000 from the bank at 12% interest for 60 days, and an adjusting entry is needed on December 31st. The only reason we have to do this is because we've incurred an interest expense between the day we borrowed it, December 16th, and the end of our fiscal year at December 31st. So all we do is we calculate the amount of interest using the same formula: principal times rate times time, and then we do this adjusting entry at the end of the year. That allows us to record the expense during 2020. Then, and on February 14th, Valentine's Day, when we get to pay it off, then we'll debit interest expense for any expense we've incurred during 2021, which would be 45 days worth. And then we'll debit interest payable for this interest payable we created up here on our adjusting entry. We'll debit our notes payable to pay off the loan, and then we'll credit cash for the full amount. So this little idea of having to do an adjusting entry at the end of the year, I swear this always catches somebody out in an exam, because they're just thinking in straight time, oh, it was 60 days, not realizing, oh, there was an intervening adjustment that had to happen to show that interest expense during the prior time period. So that one gets people, it catches people by surprise. All right, that's enough on short-term notes payable. So we'll talk about payroll. So what's challenging about payroll for some people is the fact that there's kind of 2 things going on. First, we have employee payroll deductions, meaning if we're the business and we're paying our employees, we have to pull money out of our employees' paychecks for things like federal and state income tax, voluntary deductions like health insurance or charitable giving, and then our FICA and Medicare, or Social Security and Medicare, which is all part of FICA. So just recognize, anybody who's ever earned a paycheck, it's always fun to watch my teenage kids when they get their first job, and then they work their first 2 weeks or whatever, and they've calculated in their head, they know how much they make per hour, and then they multiply that by the number of hours they worked, and then they get their first paycheck, and it's way less than what they thought. And I'm supposed to be sympathetic, but on the inside, I'm like, welcome to life, sucker, right? Like this is your whole life. Someone's going to be taking from you. But hey, we like roads and we like other things that get paid for with that. So anyway, so we have our gross pay minus deductions, and then that will equal the net pay, or the amount we're paying actually to the employee. So Social Security taxes as of 2019, when this was made, I think it's still the same right now, 6.2%. You can tell how often I actually deal with payroll in real life. 6.2% of the first 132,900 earned in the year. And so for what we're doing in this book, these are the numbers we'll use. And then Medicare taxes are 1.45% of all wages, regardless of how much a person earns. So employers have to withhold this from the employee's pay. Also, employees have federal income tax withholding and state and local. Some jurisdictions even have local income taxes. We don't have those here in Arizona. We just have federal and state. When we lived in Texas, only federal. There was no state income tax in Texas. So another reason that Texas people love Texas. I think there's a few other states that also don't have state income tax. All right. Additionally, there's employee voluntary deductions. Again, things like medical life insurance premiums, pension contributions, etc. So those are amounts that we pull out of employees' paychecks because they've elected to have that money pulled out. So here's what a journal entry would look like. We would debit salary expense, the whole amount that we owe the employee, and then we would credit payable accounts for all of these withholdings. You can see Social Security, Medicare, federal income taxes, medical insurance, union dues, and then finally the difference between the salary expense and all of these withholdings is going to be our salaries payable. Okay, so recognize that all of these are payables because usually the federal government, the state government, all those people that we're sending this info to, they usually just have us pay them sometimes monthly, sometimes quarterly. So what we do is each time we do payroll, we just create these payables. And then when the bill comes due, we send, as the employer, we send the money to the government. And then the other journal entry will be the cash entry. So we'll actually, when we pay our payroll, we'll show $1,524 in cash coming out. The remaining money, that remaining $476, that will also get paid out in cash when we actually have to write the checks to the federal government, and in this case, the union, for all those things. All right, the other side of this is the employer also has to pay payroll taxes. So the employer has to pay Social Security and Medicare and federal and state unemployment taxes. So most of you probably already know this, but that 6.2% in Social Security that you're paying as the employee, your employer pays a matching amount. So it's actually a total of 12.4% in Social Security taxes. That's what's rough about being self-employed. You pay the full amount, right? You pay your half and the employer's half, and that hurts. My wife is a professional artist, and hers is interesting because we don't pay her a paycheck. We just file a Schedule C for her business at the end of the year, and any income she makes, we're paying that full 12.4% in Social Security and 2.9% in Medicare. And well, let's just say it hurts a little sometimes. And these are just federal employment tax and the state unemployment tax, and 6% on the first $7,000 of wages. And then state unemployment is 5.4% on the first $7,000 of wages. And again, so this is something in expense straight to the employer. So we'll debit payroll tax expense, and then we'll credit payables for all of those amounts.
I have a question. Is that from any gross payment salary?
Yes.
Okay. Yes, because I was trying to do the quick access, and it was not working, and I was like, I didn't understand anything. But thank you for clarifying this thing.
Okay, yeah, no, and what can be a little confusing about this sometimes is it's like on the first, so the first $7,000 of gross pay of wages paid to each employee. So once that employee has made past $7,000, then there won't be any additional federal unemployment tax on them. And so that can be confusing at times. And so you have to look carefully. And the problem in real life, you just know what your payroll is because you've been paying people. But in problems, it'll have to tell you how much they've been paid already this year, right? And that can be all right. So that's kind of it on payroll. So then there's the other new concepts in this chapter is the idea of an estimated liability. This is where you don't know for sure exactly how much you're going to have to pay, but you have an idea. So an estimated liability is a known obligation of an uncertain amount that can be reasonably estimated. Again, I hate to just read the slide, but I think that's an important definition of what an estimated liability is. Examples are things like pensions, healthcare, vacation pay, and like warranties, right? So, where I work, we all get like vacation time that accrues, and they don't know exactly how much of that they're going to have to pay at any given month. And where I work, you can even sell it back when you retire. So they consider that part of your compensation package. That's why a lot of employers will cap it and say you can't get more than 100 days of sick time or whatever it is, because they're trying to be able to have a stronger estimate on that liability. So here's an example. Employer expenses for pension, medical, etc. So here an employer agrees to pay an amount for medical insurance equal to $8,000 and contribute an additional 10% of the employee's $120,000 gross salary to a retirement program. So this one, this seems like a pretty easy amount, actually. I'm not sure why this one they put in there as an example for that, because they know the exact amounts that they're going to be holding out. Let's see. So here an employer earns 2 weeks of paid vacation per year. So again, what they do is they just put it into this payable account, right? So we can take it as an expense during the period that we incur it, because the minute the employee has worked a month or whatever, then they've earned the vacation days for that month. But we don't know when we're actually going to have to pay out on some of those. Here, a $10,000 bonus will be paid to employees to be shared by all. So again, we can estimate, or we know in this case, that it's $10,000. So really, all you need to know about this is we create a payable account, and then when we actually make the payment, then we can debit that payable account and credit the cash account for it. Warranties are a little more difficult, okay, because we don't know exactly what our redemptions will be on a warranty, right? So all we can really do is estimate based on past experience. Each time I sell a product, I don't know if that one's going to have an issue and break, and I'm going to have to pay warranty payment on it. So on December 1st, the dealer sells a car for $16,000 with a 1-year, 12,000-mile warranty coverage on the parts. So what they do is they make an estimate based on past experience. In this case, their experience is that 4% warranty expenses average 4% of a car's selling price. So again, in real life, you would have to figure this out. You would have to say, well, what does past experience tell us? And then make this estimate. In a problem, like in a textbook, they're going to have to tell you this information. And so all they do is they debit warranty expense. Again, that allows us to take the expense in the current fiscal period, and then credit an account called estimated warranty liability. And then whenever we actually have to make a payout on it, we're just going to debit the warranty liability and credit in this case, they didn't pay cash. They used the parts right out of inventory. So they credited the parts inventory. And then there's one more concept that's similar, but it's called contingent liabilities. And so these are liabilities that may or may not happen depending upon future events. Most of the time, these relate to things like lawsuits. If someone's suing you, right, all you can really do is go to your lawyers and say, what's the likelihood that we're going to have to pay out on this? And the lawyers are going to tell you it's either a remote, like this is a frivolous case and we think there's a really high chance it'll be tossed out, that it's possible, or that it's probable. And then if it's probable, is it estimable, like we can tell about how much we're going to have to pay, or non-estimable, we just don't know yet. And this really only comes into play when we're doing our financial statements at the end of the year. The rules are this, that if there's a remote possibility of a contingent liability happening, or where we'll have to pay on it, then we're not required by law to disclose that to anyone. Okay, we just keep that information to ourselves. If it's possible that we'll have to pay out, then what we do is just report it in the notes to our financial statements, saying we're currently involved in litigation and there's a possibility that we'll have to pay a certain amount, or not even a certain amount, just a possibility that we'll have to, that this will create a liability that's not currently on our financial statements. And then if the likelihood is probable and it's not estimable, meaning we know we're probably going to have to pay out, but we don't have any sense of how much, then again, we disclose that in our notes. And if it is estimable, meaning we have a good idea of how much we have to pay about, then we'll actually record it as a liability on our financial statements with a note explaining why we recorded that liability. So if it's probable to happen and we can tell how much, we should record that on our financial statements. Otherwise, if it's probable and we can't tell how much, or if it's just possible, then we just put it in the notes. We don't record it on the statements. And if it's remote, we don't make any disclosure at all. That to me sounds like something that'll pop up on like a quiz or exam question, right? Just the way, like whenever you see questions that are like telling you to delineate between the difference of 3 different things or whatever, that always just feels like a question. And that's really it for the new material for this chapter. And so if you have some specific questions about things, I will see if we can get McGraw-Hill up and look at them. Otherwise, if we're good, I can use this time to do well, mostly to grade those rough drafts on the second thing, and Jody to take a good look at the questions in the final exam and see if I can disclose what I can disclose fairly and within the rules.
Okay, thank you. So when will you disclose this? Will you put it in an announcement, or how are we going to know? Are you going to send me a message? What?
Yeah, I'll put it in an announcement.
Okay, perfect.
Verona, I saw your mute go off.
I was
Did you
just
have a question?
wondering, all the things you talked about were chapter 9, not chapter 10, right?
Right.
Okay.
Did you have? Are you already
Well,
into? Are you
I
already
was
working on
going
chapter 10?
into the quiz access, and some of them it must be 10 because I didn't even know where to start.
Okay. Can you? I don't know if I can get into it. I'd be
I
more than
couldn't
happy
get in
to.
earlier, so I
Okay.
don't know.
Yeah, I focused on chapter 9 since that was the one that was going to be due tomorrow, and thought I'd make sure everybody was good there. And I don't know if I'll have time. Maybe tomorrow I could record something like this for chapter 10 and post it, if that would be helpful.
Would be. Thanks.
Okay.
I have a question.
Okay.
So when this class finish, are we going to be able to review like topics from McGraw-Hill or not anymore?
I don't know the answer to that. I
don't want to forget things. That's what I am worried a little bit.
Right. And so I don't know the answer. And that's because this whole, like the way, so like at the college I work at, people buy their own access to McGraw-Hill, but here BYU Idaho has like done a contracted access, right? So that everybody has access, and it's at a much lower price than what my students have to pay. And so I don't know what that access gives you as far as, can you still log into McGraw-Hill and have access to course materials? Most courses I've dealt with, the answer is yes. But sometimes when they do these contracted things, those are the sorts of things that they sort of give a little less of in order to give the cheaper price. So I don't want to lie to you and say yes, but I would hope so.
Sometimes they offer you to buy it, but at a discounted price, but this one will go away. All the stuff on this book that we're using will go away after the time ends.
Where do you get that info, Marona?
When I went into it, it said a date that it would expire. And it
Okay.
was, you know, probably around the semester ending, early January, February.
Okay. And again, is it possible you could have like view access to something? I don't know, but if it, probably not if it's saying that. You could probably send an email to McGraw-Hill and they'll answer you like in 27 days. Like when you, but I don't
They
know
have
the answer.
offered it at discounted prices in my other classes, so I don't know if you want to just pay some extra money and get the other
I will
thing.
get it because I think for me all this stuff is like it is very important. Like so I would pay it. I don't know how much it's gonna be though, but
Yeah, and I don't know the process. As far as, let's see, financial accounting. I'm looking and see if there's notes.
it's okay. I can take a look later.
Okay, yeah, I was just looking to see if there was any info, but it just says auto access. It doesn't say anything about availability after the course end date.
Hey, Brother Fox, I have another question. Do you,
Okay.
is this the only class you teach at BYU Idaho?
It is, yes.
Okay.
2 sections a semester. Every semester.
Oh, and another question, sorry. Like I was checking, I remember the other semesters, usually on the last day of the semester ends at noon. So I was I checked it, the last exam, it says that could be like before midnight. Is going to be that way or is going to be at noon again?
Let me check. I mean, in the past, they've always been till midnight or till 11:59 p.m. on that final day, but we've had so many weird things with due dates. I would like to know that now. So that's another thing I'll ask when I ask about this discrepancy in the final exam start date.
Sounds good.
And final exam due time. Okay.
Hey, Brother Fox, are you going to do a meeting next week or no?
Should we?
I don't know. I'm just wondering if you are. If you
I
are,
mean,
then I might wait till then to take the exam. If not, then I will.
right. You know, maybe it wouldn't be a bad idea. If nothing else, it might, I don't know, for a handful of people at least, it might be like a comfort to discuss, you know, what we know at that point, because this is new to me too. Again, this is new content this year. I mean, it's all accounting, but the way McGraw-Hill works and stuff like that. And so we could definitely do a meeting and maybe talk through some of the points in the study guide and answer questions if people have them. So yes, I plan to do one.
Great. Thank you.
Even if it's just me all alone. Okay, I think we're good. So why don't we finish up and yeah, we'll do that. Any volunteers for a prayer?
I can offer the prayer.
Okay, thanks.
Yeah. Heavenly Father, we're so thankful for this day, for all the blessings we have, for the opportunity to study in this class. And thank you so much for the effort the Brother Fox does to teach us. Please help us so we can finish strong this semester and we can keep understanding and everything we need for this class and remember it for the exam. And please bless all the members of this class and help us always to do better and follow the Spirit. And we see these things in the name of thy Son Jesus Christ. Amen.
Amen. All right. Thank you. Everybody have a great night.
You too.
Thank you.